The spring market is almost here and mortgage rates are at their lowest levels since 2022. We can see some indications of homebuyer demand improving, but there are frankly a lot of other factors about the economy that appear to be keeping a lid on consistent sales growth. Nevertheless, the week's data came in pretty healthy. The week's pending home sales picked up for the second week and inventory dipped. There was a pretty decent jump in price reductions this week, up 90 basis points. The new listings were pretty low and sales were up. So I wonder if that's a reflection of the best stuff moving quickly and the overpriced properties sitting longer. It's now March, and over the next few weeks, we should see a pretty fast increase in the new listings volume. Smart sellers will watch the data and price wisely to capture any improved buyer demand. When I look at the weekly inventory data, it's really hard to see much supply on the market or much coming this spring. There are 690,000 single family homes on the market right now. There are another 207,000 condos in the active inventory for a total of 897,000 homes for sale at the end of February. Inventory dropped this week by over 1%. The total count is 8% more than a year ago, but it's still 11% fewer than back in 2019. Inventory growth is slowing, and at this point does not appear that it'll reach the old normal levels of last decade. When you look at the overall available supply of homes in the country, it still looks like a shortage. If you live in Texas or some parts of Florida, it might be hard to see this. Texas has a lot of homes for sale, about 40% more now than in 2019, but most of the country has fewer homes available now than last decade. 36 states have lower inventory now. Many states have a lot lower. The big trend of recent months is that Florida has shifted from inventory growth to declining inventory. Florida has 5% fewer homes available now than last year at this time. Texas has not rounded the corner yet. We'll see if newly lower mortgage rates maybe pick up buyer demand in Texas, which would also see inventory drop. That's a possibility, but it's not really in the data yet. 3 takeaways for inventory this spring. 1, inventory growth is slowing nationally in response to lower mortgage rates. 2, because the supply of homes for sale is not climbing quickly, the country nationally does not yet have enough inventory. And 3, the Midwest and Northeast, markets like Chicago, New Jersey, Connecticut, have a real shortage crisis still. And that shortage is preventing sales volume growth and keeping home prices higher than they would otherwise be. So let's shift the view to the weekly sales data. This week we counted 63,000 single-family homes newly pending contracts, plus another 14,000 condos. That was a jump of 6.6% for the week. The week's pending home sales came in 4.5% more than the same week a year ago. That's the second week in a row with similar growth gains compared to 2025. In the first half of the month, national pending sales were down compared to 2025 due to what largely seems to be from that deep cold and storms that pummeled the eastern half of the country. As a result, even though sales growth has been pretty strong in the non-storm weeks, overall for February, existing home sales came in barely above last year. So if you were looking at just the national data, it would be hard to tell that consumers are responding to the lowest mortgage rates since August of 2022. But the storms were not national. The harsh weather was primarily in the eastern half of the country, while the west was very warm. And you can see that in this map. If the slow home sales were weather related, then the west should have sales growth, while the east would still be below last year. So I built this map to check. To me, it's a shocking illustration of how divided this market really is. This is a view of the weekly pending single-family homes for the 4 weeks of February 26 versus February 2025. The bluer the states are here, the more home sales have grown over last year. The pinker states have fewer sales even than last year. So this is not just weather here. There are other factors, as I mentioned, is inventory. For example, in Chicago, there are so few homes for sale that it's really hard for the total number of sales to grow. Illinois home sales in February were just barely above 2025. Meanwhile, New Jersey was 9% fewer pending home sales than in 2025. So this seems to be a function of the worst of the weather and the worst of the tight inventory. My conclusion from the pending sales data is that consumers are responding to lower rates and improved affordability, but they got thwarted for much of the month. So if we're lucky and rates stay in this range in March, I expect many of the eastern states to improve sales as well, but it's not that there yet. So we're going to have to keep watching to see if I'm right. The pace of the new listings actually dipped this week to only 50,000 single-family homes. That was down 17% for the week and 6% fewer sellers listing now than last year at this time. So in February, it's not uncommon to have swings like this week to week. And I'm not frankly sure what would cause any big dip in new sellers, so I'm not reading too much into it for the weekly number, but it is notable that there are not a lot of sellers. There's not a flood of sellers. There's not an acceleration of sellers. The new listings pace has been impacted by weather, of course. Early in February, there were fewer sellers each week than you might otherwise get. To smooth out that week-to-week noise, I'm showing a 13-week rolling average here today. There are lots of reasons that sellers might want to jump or sit. And when we look at over the last quarter, though, you can see that there are just not that many sellers. There certainly aren't enough sellers each week to bring any big increase in inventory. This inventory cap is doubly true as the pace of homes going into contract does seem to be accelerating. So my take on the data here is that March is poised to have more sales and fewer sellers compared to a year ago. Overall, inventory is 8% more than a year ago. So at this pace, though, my guess is that we could exit March with only maybe 5% more inventory than a year ago. Note that in this view here, the purple line from 2025 starts to climb in March. That's expected. The spring market moves into action starting in the next couple of weeks. So this year's blue line with new listings should start moving up too. Note the gray line here from 2022. That year, you can really see how sellers were still trying to squeeze in before mortgage rates climbed too far too fast. As a result, the takeaway here is that from the new listings data is that there are just not that many. Don't look for inventory to climb quickly this spring. If you're a buyer sitting on the sidelines, you'll have normal spring inventory, of course, but it doesn't look like you're suddenly going to have a lot more options. So keep that in mind. It's no secret that home prices have been under some pressure nationally. The data has been very consistent, staying very consistent, aiming towards roughly flat home prices for the full year 2026. So this week, the data came in to support that. The median price of the week's pending home sales came in just over $396,000. That's 2.3% higher than last year at this time. In this chart, each line is a year. I'm using a 4-week rolling average to illustrate the trend here. The blue line for 2026 is still tracking a little bit above last year at this time. The national median price continues to be buoyed by those tight inventory markets we've been talking about. Prices, by this measure, are a little higher than a year ago. Meanwhile, the median ask price across the country has been consistently lower than last year. The ask price is $425,000 for single-family homes. That's 1.1% lower than the same point in 2025. The median ask price is basically unchanged for 3 years, like all the way back to 2023. The story on home prices has been pretty consistent. Some of the measures are slightly positive. Some of them are slightly negative compared to a year ago. Neither are accelerating. So I'm hearing plenty of anecdotes about people waiting on the sidelines because they expect prices to crater. I don't see any signs in the data of prices dipping further. Even in places like Southwest Florida, prices are way off the peak of 4 years ago, but they are not really dropping below last year. There are some markets with more downward pressure than other those though. So Austin, Texas, home prices actually do not appear to have found the bottom yet, but Austin is the outlier around the country right now. So the takeaway for home prices, some measures are above last year, some measures are below last year. Overall, home prices are basically flat compared to 2025. The percentage of homes on the market that have taken a price cut has been easing lower, but it jumped a bit for the week. And I suspect that might be because the week had pretty strong sales and pretty weak new listings, so the good stuff sells quickly and overpriced properties sit around longer. That could make that number move up. So this week, 32.7% of the homes on the market have taken a price cut from the original list price. You can see in this chart that it's fewer than last year, but it did a little jump for the week, up 90 basis points for the week. The chart also helps us compare to 2023. The yellow line in 23 was where demand was increasing surprisingly quickly that spring. So even though mortgage rates have dipped now, and we can measure some improvement in buyer demand, this data helps us see that demand is not surging, especially for those overpriced homes. Buyers are plenty patient. They are happy not to overpay for overpriced houses. Okay, that's all the data we have time for this week. It's now March. Let's see how Q1 completes. Will we finally see consistent sales growth? Stay tuned. Mortgage rates are at their lowest level in over 3 years. We'll see what happens next.